Okay, so continuing with our second part of the presentation, we're talking about peak formations. We're continuing our peak formations talk, and the next setup that we're going to talk about are the 1, 2, and the 22 setups, okay, or the 12 and the 22 setups. This is probably something that you've heard already, and probably wondering what they were. So we're going to talk about this, and next week we're going to do the last part of this peak formations series and talk about the 21 setups, and that will conclude our setups for the year, and then we'll go on to the new material following the break. So what is the 12 and 22 setup, or the 1, 2, and the 2, 2 setups, depending on how you want to call it and where to find it? Right, these setups are aptly named because the second leg of the larger structure has a second leg, basically. Okay, so they're usually found in level 3 for peak formations or in reset levels. And the first leg is basically an inducement with a trap, whereby the market makers will bring the price back to the first leg, luring traders in the wrong direction, and then pulling away with the reversal. Okay, then there's going to be an M&W reversal pattern that forms the second leg on the second leg, and then we have our setup. All right, now both of the 1, 2 and the 2, 2 setups have a second leg of a second leg, but what's the difference between them? Why do we call them, the 1, 2, or the 12 and the 22? And basically because the 12 setup will have an outside structure as the first leg, so something like a half Batman or like a single spike A or V structure. Okay, and then while the 22 setup will have an M or W pattern as the first leg. So if you're thinking about the structure of the setup, the 1, 2 trade has one leg, okay, like a V or an A, right? The first part of an M or a W, and then the 2 is the second leg, which has two legs. Okay, so like M or actual M or W. And then the 22 setup has two legs for both, right? So an M on the first, M on the second, or W on the first and W on the second, if you think about it like that conceptually. All right, now let's talk about the rules for these setups, okay? So there should be like a peak formation or large outside structure formed with trapping candles, okay? So you're going to see something like railroad tracks, you're going to see a pin bar, you'll see a star pattern, evening star, morning star, something like that. And that'll form the outside structure of the peak formation, okay? The first leg is usually formed in the prior day, okay? And then you're looking for the second leg to form on the higher low of the current day or the next day that you're looking at the setup, and you see the outside structure formed, all right? Price will generally come back to challenge that outside structure, so it becomes the high of the day or the low of the day from yesterday, and then it fails to break it, okay? And then that'll form the second leg. All right, and then you're going to have it come back and then form that second leg of the M or the W reversal pattern, ideally with a nameable candle pattern on the second leg, something like railroad tracks, cord of wood, one of the star patterns, something like that, but definitely a shift candle otherwise. Okay, and then the standard entry rules are going to apply with TDI confirmation. Okay, so we're still going to look for break above or below the 13 EMA, and then the TDI above the signal line and above the market baseline. Okay, so same rules as our M&W patterns. All right, so let's take a look at some chart examples, and I'll show you what I'm talking about. All right, so let's take a look at here. We have EU. Okay, this is going to be a 1, 2 or a 12 setup long. All right, now let's take a look here. All right, you can see here this fast move down creates this outside structure. All right, and this is formed on the prior day. All right, so this is going into the next day. You can see that the blue tracer here, yesterday's low, the blue dotted line, okay, marks the low of the day from yesterday from the outside structure. Okay, so we have Asian range consolidation, okay, going into the new day. London open starts, okay, and then we come down here to this area right here. Okay, you can see price comes back to challenge the low of the day, but fails to break it. It goes through it, okay, but then it comes right back up above it. Okay, so now this becomes the first leg of the 2, okay, of this setup. All right, and we got to close above the 13, so that confirms our first leg. Then we got to close back below, okay, and then now here is our second leg. We have this evening star pattern. Okay, do you guys see that? Now, evening star pattern we have a close above the 13. Okay, we have a TDI confirmation as well. Okay, RSI above the signal line. All right, and we can take our entry right there. All right. The only issue with that is that there's the 50 EMA right above that. Okay, you can see that it does bounce off of that and come back down. All right. However, the signal here is strong enough for you to take that entry. We have the confirmation you can take it. Your stop loss is going to go below that low because you don't want that low to be broken, right? So your stop loss is going to go below that low. You're going to enter there, all right? And then you can see here that's their entry candle, and then this move right here confirms with the TDI, and then it's okay to take that trade. If you want to, you can wait for the 50 EMA to break, to close above, and then take it there. That'll be safer. However, you can see this move here. It does come back down and challenge the low again. Okay, but it does not take out this low here. Okay, you can see this area right here. Okay, comes back to the blue tracer, dips below again, induces more traders to go short. Okay, one more time, and pulls away. All right, right here you get another set of railroad tracks. Okay, with another TDI confirmation. If you're bold, you can take another entry right here. All right, that would be valid entry as well. All right, and then you can see price shoots up right after that. All right, this would be a nice 100 pip trade just on this one. So if you took 2 trades here, it'd be 200 pips on 2 trades if you were to able to catch the full move here up to this point. Okay, but any time before that, obviously you're going to be very happy when you see this candle move up, on your setup. But you can see here that this price does come back, doesn't break that low, and you can take a second entry here to give it a nice long trade. All right, so here's the structure of a 1-2 setup. Right, you can see here the first leg, okay, being a 1-leg single spike V. All right, and then your second leg here. Okay, so 1, 2, or even if you want to look at it on a higher time frame standpoint, you can have 1 and then 1, 2, like that. All right, so that's how you're looking at the 1-2 setups. So that is a long setup. So let's look at another example. All right, this is EURUSD. Okay, and then we're going to look at another setup long, 1-2 setup long. So here we can see again that price moves down. Okay, outside structure formed on the prior day. Now we have a couple different structures we can look at, because this can actually be considered a 1-2 trade or even a 2-2 setup, right? Because you can see we have a couple 2-leg structures here, one here and one here. I'm just looking at the first outside structure that's created from the fast move down, because this is the move that's going to induce traders to go short initially, right? And then after that, subsequent moves down to induce, obviously, are also trap moves to induce traders short. But I'm going off the first move here that I see, and that forms this low here off of the blue tracer. You can see here the wick that comes down here. That's the move that creates this blue tracer, right? The low for the next day. So this is the outside structure formed in the prior day. All right, and you can see here price comes back after the consolidation. Okay, comes back down here and challenges that blue tracer, right? Comes back to challenge it, but fails to break it, right? This time it did not go through. It didn't even come close to it, really. Well, I mean, it came close just a little bit, and then bounced right up. Okay, so here's our first leg, right? Confirms, closes above the 13 EMA. All right, gives us a reversal back down, closes back below the 13 EMA, and then back above again. Right here, this shift candle, okay, is going to be your half bat entry. So you can see here, this is a half bat pattern, right? We have this low and this low. We got 10 pips between here and here, right? This is the second leg, okay? And with this shift candle shifts above the apex, okay, and that gives you your half a bat entry. Okay, this also confirms with the TDI. Obviously, you have the RSI above the signal line, above the market baseline, and that gives you your entry. All right, so TDI confirmation right there. All right, and that's a nice 70 pip trade if you were to hold it up to this point. You can see it even goes higher if you held it to the end of the session into Asia, right, into the next day. All right. Let's look at an example of a 22 trade. Okay, so this is USDICAD 22 setup long. So now this is a contrast. You can see here this outside structure formed prior day. Okay, very noticeable 2-legged structure here, right? As opposed to EURUSD previous structure, we had a bunch of different legs challenging that leg. But this is a very clear W structure that forms the low of the day here on the previous day. All right, price comes back up, okay, comes down in Asia, trades down, trades lower, and then comes right to or pretty close to this blue tracer here, but also challenges these lows here, right? So price comes back to challenge the low of the day, fails to break it, comes back up over the 13, right? So we get our first leg confirmed here, even above the 50, all right? And then immediately comes down below the 13 again after that, okay, which gives us a second leg. So right here, okay, is our half bat entry. All right, you can see here, first leg, second leg, more than 10 pips, right? A big shift candle closes above the apex, okay, with the half bat entry here. You could even wait for a pullback entry, which is nicer since this is a pretty large shift candle, okay? You can wait for the pullback, okay, and coincidentally a pullback to the middle of the Asian range, okay, and take that. It's a much better trade. You're going to get a better risk reward. Your stop loss is going to go below this swing low, or to be safe, below the blue tracer swing low, right? Okay, you can see the price never even, comes close to that. Does come back and tap the 50 EMA, okay, for a nice bounce trade back up, all right? TDI confirms here with the RSI signal line above the signal line, above the market baseline, and even above the static, which gives it that much more strength, right? And this is a very nice 70 pip move as well, up to the blue tracer from the previous day, okay, to the end of the session. And then this continues up further up into the next day. All right, one more example of 22 setup long. We can see here on a GBP odd. All right, outside structure created on the prior day. All right, nice W structure here with a big shift upwards. Okay, then a move back down, and then consolidates. Actually, it slows, creeps back up at the end of the session here into Asia. Right, so a nice clear W structure prior day that forms this low. Right, you can see here the blue tracer is formed from the first leg of this outside structure here. The second leg is formed, and then we go into Asia. It trades down back towards the low, okay, and gives us this first leg here, closes above the 13, and comes back, doesn't take out this low, and doesn't come close to this low down here, all right, but we have our W structure right here, okay? Now, can we take the trade on this close of the 13 right here, okay? Can we do that? Well, no, we can't, right? Because, well, we have the 50 EMA here right above us, so there's a possibility of that bouncing and coming down again, so that might come back down and test the low here from that point. But we also don't have our TDI confirmation here because the RSI has not crossed the market baseline yet, right? We do have a cross of the signal line, but at that point, at this close of this candle, we aren't above the market baseline yet. So really, your entry... Sorry, price comes back to challenge the low of the day, but fails to break it. But really, your entry here is going to be on this candle, okay, right here, okay, where it closes above the 50, all right, and also gives you your TDI confirmation, all right? So you can see that right there. That's where it confirms above the market baseline, above the signal line, all right? And that trade right there is going to give you 180 pips, all right? Even taking it right there. All right. If you were lucky enough to take it down here, take an earlier entry, an aggressive entry, just because you thought this low wasn't going to get broken, you could have made much more, obviously. But 180 pips, even if you're catching the lion's share of that, somewhere up here on this pullback, if let's say you caught this entry late and you saw this W structure, you caught this pullback here and got that. I mean, you're still making well over 150 pips, which is a very, very nice trade. Okay. All right. Enough of the long setups. Let's look at some shorts. Okay, so let's look at the 1-2 setup short. Okay, this is going to be a USD CHF setup. So same thing, just flipped reverse. All right, so let's look at here. We can see the outside structure formed on the prior day. All right, very nice move upwards, close the ends of the session, and then you can see that the low of the day up here forms this dotted blue tracer high of the day line right here. Okay, now we have the Asian consolidation. All right, price comes back to challenge, okay, that high of the day, but fails to break it. Now it does go through it. Okay, you can see here even on this second leg it goes through quite aggressively. Okay, but you can see the first leg here traps the blue tracer, comes back down. Okay, gives us a first leg because we have a close above, then back below the 13. Okay, then back above the 13 again. Very nice star pattern here that traps the blue tracer and closes below the 13 EMA. Okay, so look at that nice evening star pattern. We got a pin bar, shooting star right evening star pattern, a nice big shift candle below the 13 EMA, and then we can see that TDI confirms as well, and we don't have that line, sorry. TDI confirms, all right, giving us a very nice drop, okay, down here, and you can see 50 pips down to the end of the trade down here. Okay, this is USHF, so the range is much lower. You can see the ADR is only 53 pips. So really, if you're catching the move here, you're looking to exit around this area here, around the 200 EMA. And if it does give you a move lower, then you're looking to take out the low, this low, once it gives it that pullback, somewhere around here. Okay, you're not looking for a home run on USD CHF because of the low ADR range. Okay, and that goes for all low ADR range pairs. Don't try to to break the bank and go for gold. Really just get your 20-30 pips and get out of the trade. All right, let's look at another setup. So this is GBP CAD. All right, and we're going to be looking at another 12 setup short. So I wanted to include this setup because this happened on all of the GBP pairs pretty much, all the crosses. Something similar like this happened. Okay, so we can anticipate this if it happens again on another big Brexit move, possibly this week if it does occur. Okay, but you can see here a very nice outside structure that was formed prior day that creates this blue tracer. Okay. Now, we can see here that price does come back and challenge that tracer, okay? Gives it a nice shift candle above it to induce a trader's long, and then immediately takes it away, okay? Now, this is a very large move in and itself. You can see here the range on this Asia range was about 100 pips, okay? So this is more than a 100 pip move in and of itself, and that's just the first leg, all right? So you can see here it comes back, okay, and trades back above the blue tracer and then comes back and traps it again, okay? Comes back down, closes below the 13 EMA right here, okay? This is your shift candle entry, right? You can see here the TDI confirms as well, the RSI below the market baseline, below the signal line. This is just right on the cusp, okay? But you can see here, this is where your shift candle entry would be. Now, having said that, this is right at the end of the session, okay? So you might not be looking to take a trade this late in the day, all right? So that's okay. You can see here that it does go off into consolidation, doesn't really move much. You can see Asia here consolidates. You can wait for the next day, okay, to take this entry here because you can see you get another shift candle that shifts below the 13 and the 50, okay? There's a little bit of a small pip range here between that and the 200, so you can even wait for this one, all right, here to close below the 200, but you definitely have your TDI confirmation here as well. And then even if you waited the following day to catch this move down here, right, this move in itself, oh, here's the TDI confirmation. This move in itself was a 415 pip move if you caught it from here, okay? So this move right here, you're still catching about 350, 370 pips, even if you caught it late the next day, all right? So big move here. This was obviously Brexit news, so this is an exaggerated move, and you're not gonna see setups like this very often. But man, when these come around, they pay out huge. Okay, so very nice setup. That's why I wanted to include this, just to show you guys it can happen across multi-day time frames, right? And we have this peaks situation short. All right. Okay, let's look at some 22 setups short. All right, so this example here, we have EUR JPY, 2-2 setup. All right, first outside structure created prior day here, this M structure. All right, you can see here, close below 13, back above, back below. All right, so it's our M structure, outside structure formed the prior day that creates this blue tracer into the next day. All right, you can see price will come back, challenge that high. Okay, fail to break it. All right, it even comes down here. You might have thought you missed the move here, right? And maybe you thought this was the second leg of that M, right? So maybe you caught a mini move, but then it bounces off of the 200 and comes right back up to this high here, right? And challenges that high, doesn't take it out, right? And then this right here is your evening star entry right there. Okay, close below the 13. You can wait to the next candle to close below the 50, all right? Because it is pretty close there. You can bounce up and maybe give you a little rejection here, but you can wait for the close of that candle if you want. But you can see the TDI here does confirm on that candle. Okay, it gives you the signal line below the market baseline. Actually, this is pretty close. This is right on the edge. Okay, so you can wait for this candle. This candle does confirm below the market baseline right here, but this entry is good because it's an evening star second leg nameable pattern, and you can see it drops down pretty nicely here, giving you a nice 50 pip trade down to this rejection point here, and then you can see it even trades lower into Asia. All right, and next setup, one more 2-2 setup I want to show you on the Aussie dollar. Okay, so you can see here, I had this to blow this out, zoom this out so you can see the full move and the potential of these setups here. Oops, sorry, my slides are a little bit out of order here. All right, so you can see here we have the outside structure formed on the prior day. Okay, it creates this this M structure here. All right, that creates this blue tracer for us on the following day. All right, then price does come back to challenge the blue tracer here. Okay, fails to break it. All right, it does bounce off the 50 and come back and give you another leg up here. Okay, comes through. You can see this wick here, wicks just through to induce traders long, pick up those pendings, and then right after that pulls sharply away. Okay, there's another even big wick here, right, to give you a further inducement. Like, remember, this wick here used to be a big green candle, right? So people are still looking at this as a long, and this is a big trap move. You can see that it leaves this big wick here, and then bam, it shoots right down from there. All right, so this shift candle here closes below the 50 EMA here with the TDI confirmation is your shift candle entry. Okay, and then you can see this big nice move down here, 120 pips all the way to the bottom. Now this is Aussie dollar. Okay, so this is, you know, a short range. There's 68 pips. Okay, so obviously if you're holding it through, you know, 1, 2, 3 days down here, you're going to make 120 pips, but that's after 3 days, right? And because it's a short ADR pair. So like I said, for smaller range ADR pairs, you just want to get your trade pips and get out. You can see that this big move really right here to end the session, this would have been a nice point to exit the trade. And then the following day, you can see you get a nice bounce off of the 50 EMA here that you could take another trade here, and then continuation trades after that, following that. All right. So either way you want to play it, you can, you know, after this entry here, you ride it all the way down. All right. We'll get into swing trading and longer term trading in the next part of the curriculum, so you guys will see how to catch these moves like this. But intraday, you're just really trying to capture these moves here. All right. Okay, so let's look at some setups off of some reset setups. Okay, so if we look at here, we have an example of UJ. Okay, this is a 1-2 setup long off of a reset. Okay, this resetted off of the 200 EMA, you can see here. So this example, we have this outside structure formed on the prior day. All right, nice V spike right here, consolidates, ends the session, and then into Asia. We trade higher, but then we go immediately lower down here, right back to this low area. You can see the blue tracer right back low to this blue tracer area. Does not take it out, comes back, closes above the 13 EMA. Okay, gives us a first leg. Comes back below the 13, then back above. You can see nice morning star formation right here. All right, so price comes back to challenge the low of the day, but fails to break it. All right. This entry right here, you can take this Morningstar entry, okay, but there's a couple things here. We have the 50 EMA above, all right, and then we have the TDI confirmation, okay, which gives us a strong entry. But if you want to wait for that shift candle, okay, for that entry, you can wait for that shift candle to take a safer entry and a better trade. Okay, so you have the stop loss right below the low here, okay. So as long as you keep it below this, you should be safe, because you don't want to see them break below that price. If it does, then it has a chance of coming back down, given this high here, this swing high. But you can see here, after this entry, this shift candle entry, you have a nice move up. TDI confirms with that candle, and you got a nice 25 pip move right up here to this marker here. Now this is UJ, another low ADR range pair. So this is a typical trade, like what you would see intraday on UJ. Okay, 25 pips, 30 pips, right? And this is what you would need to be looking for on an intraday level, not looking to take out, you know, huge moves on a small ADR pair. You can see that the price does come back down here, takes out that low, but then comes immediately back up afterwards, okay? And then you don't see this on the chart, but it does move even higher after that. So yes, it does move higher, and yes, you know, you could be getting more pips if you're holding the trade, but you're still holding through stuff like this. Okay, so you know, that's on the longer trade and higher time frame stuff that I'll be teaching later on. But intraday, this is the kind of move that you're looking for: 25-30 pips on a low ADR range pair and a nice reset setup. Okay, all right, one last example and then we can wrap this up. Okay, so let's look at GJ. All right, this is a 1-2 setup reset short. Okay, so taking a look here, we have our outside structure formed prior day. You can see here that the price moves up, creates this outside structure. Then we trade lower in the Asian session, bounces off of this this 800 EMA, okay, and then comes back up to challenge that high right here. We don't have a blue tracer here this time. Actually, the blue tracer is a little bit higher, okay, but we do have this blue tracer low here, all right. But this is a reset move, that's why, okay. So I want you to take note of that. All of the other trades that I've shown you were peak highs, level 3 formations highs. This is a reset level, so you're not going to get sometimes that blue tracer up here, but the high is still the same. The concept is still the same. You're still looking for that high made the previous day on that outside structure, and you're looking for it to challenge that high and not break it. Okay, so it does the exact same thing right here. Okay, so you can see a move here from London, comes up to the high, doesn't break it, gives you a second leg here. This is an advanced structure. Okay, so this really could be construed as the first leg of that structure, but here gives you an advanced M second leg high, doesn't break that. And then you have this shift candle here that shifts below the 13, the 200, and the 50. Okay, so this shift candle right here is the one that confirms with the TDI though. So that's why I've marked this one as the entry candle. Okay, this candle here closes below the EMAs, but you still don't have the move below the market baseline. It isn't until this candle here that you give that move to the below the market baseline to take that entry. You can see you get a little pullback here, right, and another big shift. This shift candle shifts below the 800, and this is your money candle. This is when you know that you're in the right direction at that point, okay? And then you get a nice big move down, okay? TDI confirmed there, a nice big move down for a 150 pip move on this reset trade. Okay, so that's pretty much it, guys, for the 1-2 and the 2-2 setups. All right. Hope you guys found that useful. And if you go back and back test on your charts, you guys can look for these setups and see how well they play out. Okay. Follow the rules. Review this video a few times if you need to. All right. As I said, next week we're going to be talking about the follow-up to this, which is a 21 trade. Okay, and then we'll look at some examples of that. Obviously, you guys can figure that out probably what the 21 trade is given today's lesson, but we'll save that for next week, and I'll show you some examples of that. All right, but that's going to do it for today's lesson, guys. We'll see you next week on the next webinar. Thanks.